Billionaire investor Ray Dalio recently sat down with Yahoo News where he made some shocking statements and predictions. In today's video, we break down his forecast for America's future and look into the mind of a genius investor who sees troubling developments brewing in the markets. Dalio recently wrote a book titled Why Nations Succeed and Fail. It's a look into the history of superpowers and their inevitable collapse. While Ray is hesitant to acknowledge that these same weaknesses outlined in his book are the ones we are experiencing right now in the United States, the facts are clear and indisputable. As you're about to see, the US may be entering a troubling period of decline. We start off with the three signs. These are three clues that emerge as precursors to the collapse of a nation. They have been studied extensively and offer us a clue to the future health of any country. The first is the monetization of debt. This is a very complex way of saying that the government begins to borrow money from the central bank to pay for things. In the US today, we are witnessing this at an extreme scale. The second is internal conflict. Besides the polarization that exists in ideology, we also have a massive invisible battle between the rich and the poor. Wealth inequality is going up every year, giving rise to extremism. Then finally, the third piece is a rising power challenging the existing power. We clearly have that with China's ever-growing presence on the global stage, pushing around the existing power, the United States. Dalio talks about the three signs in a broad way within his book, but he does accept the resemblance to today's situation here in the United States. Here's a clip I'm going to speed up a bit to prove my case, but take a listen to what he says right after.
You've expressed concern about low interest rates that often lead to higher debt burdens and inflation. Would you say that characterizes what's happening in the United States right now?
Well, let me clarify. The three things that you mentioned are financial conditions, the production of debt and money to monetize those, the internal conflict over wealth and other things, politics, the greater extremism, and then the rise of a great power to challenge an existing great power in the form of China. Those three things never happened in my lifetime before.
Okay, so this scenario has never before been seen in US history, at least not since the country has emerged as a global superpower. So what does it exactly mean for the economy? Well, we focus our attention on the first sign, monetization of debt. The US isn't going to be the first to go through something like this. It's happened before and the results have been consistent. As Dalio states in his book, the printing of massive amounts of money is the last stage in a long-term debt cycle. Inflation begins to occur, and we are seeing this with goods, services, and most financial assets beginning to jump in price. You see, when you inject an enormous amount of dollars into the economy, there is a perception of wealth creation. But in reality, the standard of living for the average person stagnates and even drops off. You may think that money printing destroys the stock market, but study history and you see that markets typically rally during a currency crisis. Even in Weimar Germany, where citizens witnessed the complete destruction of a currency, the German mark, the German stock market flourished and rose even when measured through the prism of the dollar. So while the dollar can erode quickly, the markets can potentially protect you during these troubling times. That brings me to the sponsor for today's video, public.com. It's an investing platform where you can buy stocks and ETFs. There is no commission fee on standard stock trades, and there is no account minimum to get started. You can also buy fractional shares with as little as $1. But what makes Public different is the community experience they bring to investing. You can actually share ideas with other members and get insights from other notable investors. I just really like the social aspect of the app because you can actually find me on there in case you're curious to see what market news and trends I'm following. They also have in-app explanations, which mean if you don't know what something means, you can click on a keyword and it'll show you its definition right there in the app. Very beginner friendly, and you can learn as you invest. But my favorite part about Public is that they put their investors first because they do not accept payment for order flow. Public made the decision not to accept payment for order flow, which means they don't sell your trades to market makers unlike other investing apps. Instead, they place the trades directly. Click the link in the description below or go to public.com/mhfin where you can get a free stock between $3 and $300 when you make an account and deposit some money. Thank you for sponsoring this part of the video. Now let's get back to Dalio's take on the future of markets. Ray understands what the Federal Reserve has done in the past 2 years. While we can listen to people like Peter Schiff who criticize the Fed's every move, we have to be realistic. In February of 2020, the bank was put into a very difficult situation. The Fed balance sheet was already at an enormous $4 trillion, but a worldwide pandemic threatened to bring everything down. Powell was left with two simple options: ignore the millions who were going to lose their jobs and the thousands who would lose their businesses, or print trillions more to save the economy. He of course did what any other person in that position would do. He chose to print a couple trillion and save us from the impending doom. But this of course had long-term consequences. The Fed balance rose from 4.1 trillion to 8.7 trillion, and it's showing no signs of slowing down. This put enormous stress on the dollar, and we soon saw massive inflation. It was the ultimate trade-off, and time will tell if it was worth it. The question is simple: will this be the thing that ultimately unwinds the American economy and its worldwide dominance? This is what Dalio had to say.
And so the question is really, are the consequences of not doing that better or worse than the consequences of doing that?
Okay, so quickly, where do you come out on that trade-off? Is it a binary yes or no?
It's a reflection of the state of where we are in the cycle, that we have borrowed. It's all the problems that we've gotten ourselves into by acquiring too much debt and spending more than we're earning rather than being more productive, and also not distributing the opportunities and the incomes in a way that it's a broad-based prosperity. So on the one hand, you have a prosperity that this bottom 60% of the population isn't participating in very much. And at the same time, you have, so it's creating that polarity. And at the same time, you have the financial markets. So those are trade-offs that, different people, the only thing I care about is whether we're productive, whether we increase the size of the pie through productivity and then divide it well so that you create something closer to equal opportunity that produces greater political stability and also draws on the population.
So while he doesn't answer with a binary yes or no, his complex response seems to indicate that no, it wasn't worth it. Pre-pandemic, the thought of having housing rise 25% in 1 year or the CPI to be at a 30-year high would be unthinkable. What we did with our actions caused short-term euphoria and left us with a horrible hangover. Now the question is, do we put down the bottle and end our addiction to money printing cold turkey, or do we continue to indulge until something really bad happens? In my opinion, we continue and nothing changes. For the bottom 60%, this means a lower quality of life. For the top 40%, and especially those in the top 1%, this means a life of extravagance. Assets will continue to inflate, which means the rich will only get richer. For the bottom 60, the future seems grim. No politician and no money manager will ever talk about the gloomy prospects of the future here in the United States. This is likely because it's in their interest not to, and after all, like I mentioned earlier, those in the elite class of society will only benefit from this scenario. Dalio in this interview especially goes even as far as implying that our country is headed towards civil war. Throughout world history, when an empire encounters financial trouble, they all make the same deadly mistake. They print money, enlarging the wealth gap, thereby stimulating internal tensions.
And you see the same thing happening over and over again. When there's a financial problem, when the granaries are empty and the coffers are empty, they print money. And when they print money and the coffers are empty, it devalues money. And with that, when you have a large gap of people at each other's throats, then you create a risk of an internal conflict, a risk of some kind of civil war.
So how does all of this relate back to stocks? Look no further than the last 15 years. The S&P 500 has done nothing but go up. For every crash or correction, the Fed stepped up and ensured that there will never ever be a depression. We have essentially cured financial depression in this country by allowing policies like QE and 0% interest to take over. Since the market bottomed out following the Great Recession in 2009, the S&P 500 has never spent more than 143 days falling and has always recovered its losses within 4 months. That's over 12 years of stocks just going up. This is not normal. In fact, in a totally free market, this is close to impossible. It's a result of Fed interference, and it will continue until one day the free money trick ends. Thank you guys for watching. As always, please make sure you hit that subscribe and like button if you enjoyed.